Well, hello everybody. We're back again, but we've got infinitely smarter and brighter because we have a much better guest.
Oh,
we do.
Very good.
Who we got, Mark?
Oh, now come on, you're going to ask me to introduce Tracey Pye?
Yes.
Oh, really? So, Tracey, thank you for coming on board with us.
That's okay.
We're pretty excited to have our first guest on the podcast.
Wow, I didn't know that. You didn't tell me that.
Well, we didn't want to have the expectation rise too much, you see. It was important that we made you feel comfortable at home.
Everyone else said no.
And look, that's why you're trapped in the middle, so you can't make a run for it.
Can't get out.
So, those who are not watching on the YouTube, we have made it very hard for Tracey to take off and run, but we're sure that she's not going to need to do that, so that's okay.
No. So Tracey Pye is here from Mortgage Express, and maybe Tracey, you can explain quickly who you are and what you do.
Okay, so Mortgage Express is part of the Harcourts group, and I'm a broker. So anybody that comes through the office, I have a little chat with and give them some finance options.
Yep. All right. So, what does a mortgage broker do?
Is that right over the road? Because it's blocking
It
your
is,
limelight.
So as a mortgage broker, we research the lenders and find the best lender for you. So it's not always rate driven, because everyone comes to you and says, what's your best rate? But rates are important, but there's also other factors you need to take into account. You've got to look at, whether you're self-employed, how long you've been in your current job, whether you get any Centrelink benefits. So there's all different factors you need to take into account.
So lenders would obviously have different criteria, and you'd move them to the right one that makes the most sense.
And that's the advantage with a broker, because we know their policies, so you don't have to go door to door to every bank in town.
Which would be really arduous if you did, wouldn't it?
It would be, because quite often it might be a lender that isn't in town. So, you know, it could be someone like your INGs or Macquarie banks or something like that don't have any branch presence.
So, Tracey, a lot of people have for whatever reason, a really strong relationship with their bank. So often we say, do you want to speak to a broker? They go, no, I'm with the CBA. I just want to go to the CBA. So what's your answer to that?
My answer to that is, I can assist you and I can put you to CBA. I've been now in the industry for 15 years. So if I saw you 15 years ago, I've still got all your information on file. I guarantee if you walk into a bank, you will not see the same person twice.
Pretty sure that would be right.
That's probably true.
So, I've got your history and you don't have to provide a lot of the documentation over and over again. If you're really loyal and you want to stay with a bank, I can still put you with that lender, and most often I can get you a better rate than what's being advertised.
That was just what I was going to ask. Surely because you also know what's going to make them be more attractive, you'd be able to push that application even with that same bank in a better fashion, wouldn't you?
Yeah, so we just apply for a pricing approval and, based on what other lenders are offering, and quite often can get a better rate than what you can walk into a branch.
Well, that makes perfect sense to me,
So, Tracey, we've seen a bit in the media lately about, the housing market and interest rate cuts, and, people saying it's now harder to get a loan. Has the marketplace shifted from where it was, say, 5 years ago? Is it harder to get a loan? Is it not harder to get a loan?
It's much harder to get a loan now. So
in what way?
The focus is on living expenses. Once upon a time, the banks had a generic living expense. So one couple with a child, their living expenses might have been, $2,800 a month or something like that. You now have to look at people's spending habits based on their last 3 months, and actually declare living expenses as to what the person spends per month.
When you say that, do you mean literally go through their bank statement and see what their water bill is, what their grocery bill is?
Not everyone, some people might send their children to grammar, for example, so their living expenses may be higher because their education costs are going to be higher than someone that just goes to a public school.
So essentially the bank's asking you to provide a budget?
Sit down and do budgets.
Now, there's something interesting you just mentioned there, Tracey. So you mentioned in the last 3 months. So would that mean that if people really are intent on moving into the property market or buying that next investment, that they actually should be thinking about the way their spending is over a 3-month period? So even if they had, so take away the excesses that they might have done six months ago.
Don't do it over Christmas because you're...
Well, there's always going to be discretionary spending, but I do often meet with people and then work with them to get them in a position to get a loan, because not everyone is aware of what they do actually spend. Because tap and pay is quite dangerous. So, you know.
Yes, I've seen my statements.
Yeah. Well, you don't have money in your wallet anymore, and you don't
No.
realise you're down to your last $20 or something like that. So.
Well, I must admit, I don't carry cash anymore, and
No.
I'm sure there's plenty of people out there that
Yeah.
are exactly the same as that.
So people are often surprised if you sit down and go through their statements, how many takeaway coffees they might have had in that period and how much they spent on takeaway. And
So, Tracey, how thorough do they get? So, say for instance, I pretend it's myself and my wife, and let's say maybe we both work, and she covers all the living expenses, okay? And I want to get a loan in my name, so I would go along, and it would appear that I have no living expenses. Would they check hers, or would they query that, or how would that work?
if it depends if she's on the application. So
Yeah.
if she's on the application, you still have to declare you're a married person, and living
Okay.
expenses get
Yeah.
declared for a married person.
Okay.
There are ways around that as well. So there are some lenders, if
Yeah.
you can show that your spouse or partner can support themselves and is supporting all her own expenses, we may not need to include those.
Okay.
But
So-
that's not
but-
with every lender.
But is I suppose the idea of this really though, Tracey, is to protect people from getting into trouble down the track.
Yeah.
Is that?
Yeah. We're at interest rate lows, like, you know, we're at interest rates we've never ever seen before in history. So they're not going to stay there forever. So they've got to, you know, look at.
Yeah, well, that brings
People's-
me to another point. In fact, I must admit, when I've done my lending in the past, I always factor in at least about 3%.
Yeah.
Is there a figure that they should think about for the growth over the period of time that's reasonable, so that
Well,
they?
currently loans are assessed at about 7.25%.
Well,
so
yeah, that
between
makes some
7
sense.
to 8%. That's changing. So we've seen changes this week because the lending has tightened up and
Right.
the banks aren't borrowing as much as they can, and interest rates are going to stay low for quite a while. So we have actually seen some movement this week. There's
Okay.
2 lenders have reduced the assessment rate, and there will be more lenders will follow.
So I suppose competition has something to do with that too. If they've got to be a lot
exactly.
stricter with the
Yeah.
applications, that means they've really got to work those applications a bit
Yeah.
tighter.
Yeah, so we're seeing assessment rates at the moment as low as 5.5.
Goodness, yeah.
So, Tracey, what about first home buyers? What is any grants, stamp duty things happening with them at the
So
moment?
there's still stamp duty concession for first home buyers up to
Yep.
600,000. So
Yep.
if you buy your first property, you don't pay stamp duty up to 600.
Up to 600,000.
On established, and if you're building in regional Victoria,
Is
it's
Ballarat
20,000.
regional
It
Victoria?
is, yeah.
Yes.
And metro is 10,000.
Okay.
So that's a quite a severe delineation between which actually says how buying property in places like Ballarat makes a lot of sense.
Yeah, it does. That first home buyers grant can be really helpful to first home buyers.
Yeah. So if
Yeah.
I build a house, brand new house, I get $20,000
Yeah.
from the government.
Yeah.
It's not a bad start,
And
is it?
What about? So let's talk first home buyers, Tracey. So I'm a first home buyer and I want to go out and build a house in Ballarat. It's probably going to cost you probably minimum 400, maybe,
Yeah.
roughly around that. Generically, how much deposit do I need to have, knowing that I'm going to get 20,000 from the government?
With construction,
Yeah.
Yeah.
If I want to build a house.
yeah, okay. So 420, probably about 16,000.
Okay.
Yeah,
Yep.
yeah. So around 16. So rule of thumb, anything you buy, you
Yep.
need to have 8%
Okay.
plus
Okay.
4,000 for costs.
Okay. So if I buy a $300,000 house, 8% of that's 24, and then plus 4.
Yeah.
Yep.
Yeah.
Okay.
So that's a minimum deposit. The more deposit you've
Yep.
got, the better, because then lender's mortgage insurance is applicable.
Okay.
So yeah.
So what's lender's mortgage insurance?
So lender's mortgage insurance is if you don't have a 20% deposit, you have to pay lender's mortgage insurance, and it's a compulsory payment. Doesn't protect the borrower, just protects the lender.
That's where the big difference is, isn't it?
Yeah.
People think it protects them, but it doesn't, does
No.
it? No, it's just to
No.
protect
The
whichever
lender.
the lender is. Yeah.
Yeah.
And Tracey, what about stamp duty? Do most people you see understand stamp duty, know what stamp duty is, or?
Yeah, most people, I suppose it's just a phrase that's thrown around. So everyone knows that Victoria's the highest charging stamp duty.
So for those who don't, it's basically a tax when you buy
It
a
is,
house,
yeah.
just for the government to collect some.
It's really just for them to put the process in place, isn't it?
Yeah.
You don't get anything for it.
And so, how much is stamp duty, Tracey?
I always say allow 5%.
Okay.
Yeah.
Yeah. So, It is actually, it's tiered, isn't it?
Yeah.
So it depends. First home buyers, nothing, but it's not a set percentage.
Yeah.
And if you, a Google calculation, you can
Exactly.
easily
And investment
come up
properties are slightly higher.
Yeah. But, you know, that's a lot. If you say 5% on 300,000, you know, that's $15,000,
Yeah.
obviously, that you just literally get nothing for.
Yeah, unless you're a first home buyer, so you save 15,000. Because
Yeah.
quite often people think, okay, we're not getting $20,000 because we're not building, but it's still quite substantial, those savings.
Tracey, another one I find a lot of people ask me is, so I bought a house and I claimed my first homeowners grant. I've now started dating a partner who we live together, and then they want to buy a house. Can they get the first homeowners grant?
No. So one of the questions is on the first home buyers grant, have you or your partner ever owned property previously?
Okay, so
that
do
definition-
they need to break up, go buy a house and then get back together? Is that...
Well, if they want to, but yeah. And they do checks like the State Revenue Office because it's a declaration you're signing. So
And what is considered partner? Is that together for 6 months, 12 months? Do you know? Or you don't know? Yeah.
No, I suppose anyone living in the same house and sharing.
Yeah, things.
Probably would be similar to, I suppose, if you're actually applying for any sort of government fund.
De facto
They'll have
Yeah.
I think my understanding, and I'm not sure, but I know it used to be 6 months. If you were in 6 months in a relationship, that's it. You're classified by the government. I don't know if that's still the case, but
So
it'd be
if it is
interesting to
before
find
your
out.
6-month anniversary, just work out that discussion. If you want to buy a house, might be time to call quits.
Well, it's the same with digressing, but if something after that period of time, it's very important people actually work that out, because there will be a settlement no matter what, even though it's not what we're talking about today. So those sort of things are handy to have some sort of feel for, isn't it?
So Tracey, first homeowners grant. So I've claimed no stamp duty and I've moved into my house and I want to rent it out.
So
when can I do that?
Within 12 months from settlement. So from, not settlement date, so 12 months from moving into the property.
Okay, so if I move in on the 1st of January, say, when can I rent it out? Not till 1st of January
the following year. So you must live in it for 12 months.
And if I rent it out prior, I could get made to pay that back. And I actually know someone who has got that letter recently.
And I'm quite aware of it from my side of things too, because I've seen that they do actively check, so it's not worth taking the risk, is it? And some of them say, oh, can I rent room by room? But I think that's really probably very fraught with danger as well.
I had a client that had like an exceptional circumstance because he had to move with his job. Didn't live in the property for 12 months, but he still had to pay the first time buyers back.
Oh, it's terrible. Yeah, it's really bad luck, isn't it? Because you're obviously going to have to move your
It's
employment.
bad luck, but I suppose the rules are the
rules.
So just make sure you're aware of these things, because the last thing anyone wants to do is have to come up with all that sort of money.
And another thing that you've brought up there is like you may buy a property that's already tenanted, and that tenant has exactly that tenant.
So that would therefore that means that you would have to then finish that tenancy and then move in for another 12 months.
So you must move into the property within 12 months of purchasing it.
Yes.
So for instance, if you purchased a house that had a 13-month tenancy still in place, you couldn't purchase that because
not really. You would have to see if you can bring
might
that
get an
forward.
exempt or try and get an exemption or something. That's interesting.
That is really interesting. Do you find we're talking about all of these things about what you need to have? Do you find that a good idea is to do sort of like a health check on your finances with all of these things to make sure that you've covered all of those things? And is that something that you do?
You're saying for a first home buyer or for people with loans currently?
First home buyer in particular, because they've probably never done it before.
Yeah.
But
because
also,
a lot of these terms sound quite
that's
scary.
right, and they probably don't realise because they've never been in a position. I suppose if you've already purchased, you should have some idea, but maybe with all the changes, they should check with somebody like you first.
Well, yeah, definitely. But even if you've already purchased, like a health check is a good thing to do. Like they call them home loan health checks, because interest rates at the moment, we're seeing unheard interest rates, and there's lenders out there that you're not going to know what they're advertising because, again, they're not going to be your local lenders in town that are the best rate.
And that's where that's why you know those rates, and it makes a lot of sense for them to come and talk to somebody who does.
Currently at the moment, there's 2 lenders offering 3-year fixed rates at 2.99.
Wow. So you wouldn't think that that's there.
Yeah.
So this, you've just told me something.
Wow.
need to book in for a health check myself. I think.
Exactly.
So how often would you suggest people review their home loans, Tracey?
Look, everyone says every 12 months. There's a lot of media saying, review your home loans, review your home loans.
Yeah.
If you've paid lender's mortgage insurance within the last 12 months, it would be unlikely that you could refinance
Yeah.
because there's the chance you could have to pay it again.
Yeah.
There's also exit fees, or not exit fees as such, discharge fees, discharge of registration and mortgage fees. So quite often it can be like $1,000 to change your home loan.
Okay.
So for a minimal interest rate discount, it's sometimes not worth it.
You really need to look at it. Again, it's all of those factors, isn't it? It's not just, oh, look, I could get 1% better here. You've got to look at okay, is it worth spending that much money for the benefit that I'm going to go over the length of the loan?
The reward.
But then if you can save $2,000 a year, and people think, oh, well, $2,000 isn't much, $2,000 will cover your rates. That's $2,000 in 1 year. So if you look at $2,000 over 10 years, there's $20,000.
Yeah, and if you put that into a compound
Yeah,
interest or
exactly.
something like that,
Secret
you
of
probably
life,
have
compounding
a
interest.
heck of a lot more, a bit like the way superannuation works, how it compounds.
Because quite a
Very good
people
point.
shop around for insurance,
Yes.
I've got just saved $100, $200 off my insurance.
That's true.
And everyone
You
gets
see,
excited.
you hear all the ads all the time. They're going, "Oh, I've saved
People
$200."
knocking on your door about the electricity and stuff. Yeah.
But there's a substantial amount you can change in your home loan. It's just a lot of effort, so that sometimes turns people.
And I suppose that's the thing, because if it's new to them and they're going through it all, rather than again seeking some advice, getting somebody who can help them and say, well, all you really need to provide is this.
Yeah.
Yeah.
And again, a home loan health check, quite often I'm going back to the existing lender and getting some discount there.
A bit like saying, look,
Put the squeeze
we
on.
could actually, these people are likely to
They're gonna
move.
Yep.
Can you help us out here? And that way we save you business,
Exactly.
and that would be a fantastic
Yeah.
scenario for everybody,
Yeah.
really. As long as, of course, it's for including the mortgage
Yeah.
broker.
So, Tracey, again, I'm just rolling with questions that I get asked. Hopefully people know I know some of the answers to these. But maybe I don't. Tracey, so I own my house and I go, okay, well, now's a good time, maybe I'll buy an investment property. So I own my house, but I actually don't have any money. Like I've just paid off my mortgage, so I actually don't have any physical money. Can I still do something? How does that work?
So in those scenarios, you use your property as equity because the bank will have two properties as security. So if you've got your property A that's worth $300 and you own nothing, buy something else for $300, the bank are going to hold two properties worth $600,
Yep.
and you'll only be borrowing like $320 or something like that.
So it'd be sort of like roughly 50%.
Yeah, correct.
Because
Yeah.
of the cost. So basically, I could then just borrow that whole amount, including stamp duty and
Yep.
whatever else.
And in that case, Tracey, would the bank therefore hold the mortgage over both properties, or would they put it
Over
mostly
both.
on one?
No, over both. It's called cross-securitized.
Geez, that's a big word.
Yeah.
He likes when I come up with big words.
No,
I don't have to
this
bring
is-
one now. That's
This is a
fantastic.
podcast for simple people like
I
me.
love that. Oh, it's a great
What
word.
about, how do banks look at renovations? So I own a house, or I purchase a house, and I want to do some renovations on
Yeah.
it. Is that hard to get a loan? Is it, again, come back to your value ratio? Like
Yeah,
how
it
much
does.
equity
So
you have?
depending, if you've just borrowed 95%, it would be unlikely you could get
Yep.
funds to do a construction. If you maybe owe 80%, well, yes, you do. You can do something. You may need a fixed price building contract.
Yeah, I was trying to say, so does the bank ask for building? You can't just say, I'm going to do a renovation and go to the
Again, it
casino?
depends on the lender.
So they want
and
to
it
see.
depends on how much equity you've got in your property.
Okay.
So some will allow a cash out. So if you, for example, own your property or you've got good equity,
Yeah.
they'll allow you to cash out to a certain amount. We may need to provide some quotes or evidence of what you're going to do for
What
it.
you're going to do. What about, what effect does credit cards have on your ability to borrow money?
Yeah,
So if I have a-
decreases your borrowing capacity.
Okay,
Yeah.
so if I have a credit card that has a limit of 20,000, but I don't owe any money on it, so
Yeah.
I always pay it, I never use it, it just sits there. With it just sitting there, does that still affect my...
It does, because they factor in 3.8% of the limit. So if the limit's 20, they would factor in every month. You need to put aside $780 a month to pay that credit card, because you may not owe anything today, but you could
But I could-
have a shopping
And I
spree.
suppose that they're under no issue in the respect that you could use that card. So would they sometimes in that circumstance say, look, in your circumstance with the $20,000 card, say, look, we're happy to do this, but I know that you're not really using that credit card. If you reduce that, say, to $10,000 or something such as that, would that help?
Cut it up.
Yeah, quite often,
cut it
if
up,
somebody can't borrow enough to purchase the property that they're after,
Yes.
and they've got a credit card that's sitting there and they don't use it, or there's, the limit's too high, because banks were always offering limit increases, we do request that they reduce the limit.
And I suppose they'd then have to prove that too, so that you'd have to get a letter which said that, to show that, otherwise you could simply just say, look, I've reduced it down and then I'd put it back in again.
You could, but you can't now, because there's something called positive credit reporting.
Yes.
Yeah, so when a bank does a credit check on you now, they can actually see all your credit facilities. So they can see whether they're open, whether you've been late in repayments, how late you were in your repayments, whether you've been over your limit. So they can see the conduct of your...
So that's pretty important advice if they're looking at getting credit further down the track, to make sure that they're always within a level that they can comfortably pay.
And always paying on time.
What about motor vehicles, bringing them into my home loan? So if I have a car loan that I might be paying, I don't know, 10% on, and my home loan's 5%, can you merge that in under your home loan so your percentage becomes
You can,
less?
if there's enough equity, you can, but you've got to look at whether it's worth it as well, because taking a car loan that you may be finishing in 3 years and putting it over a 30-year loan term, you've got to look at what benefit is there to the client.
So you're spreading the pain over a lot longer period, aren't you? That's the thing.
Yeah.
And loan terms, Tracey, are most 30 years, or where are banks?
Most
It used to be 25, didn't it?
Yeah, no, they're all 30 years. You've got the option to ask for a lesser loan term, depending on your age. Sometimes if you're like now over 50, you may have to have a shorter loan term because your working life.
Mark?
Yeah,
thanks for that. What
about
and I think, but it makes sense. I mean, unless you want to be working forever, and some people will say the government wants us to work forever at the moment, it's fairly important that you actually can finish the loan off at a certain time, isn't it?
Yeah.
What's an offset account?
An offset account is...
You're on fire today.
Oh.
You are on fire. It's like
doing all this research.
it's not even a pause, is it? Straight into it.
Wrote me a list of
We hadn't even breathed, and he goes, "What is an offset account?"
Most of
My
these
goodness
questions
me!
they are actually for me. I'll come and clean. I don't know any of the answers.
What's going on here? You seem to be very eager with these questions.
Yeah.
An offset account's pretty much a savings account that you don't get interest on, but it's offsetting the interest on the home loan. So if you've got $20,000 sitting in your offset account and your home loan's got a balance of $320, you're only being charged interest on $300. So it offsets the interest.
And I can take that money back out and do what I want?
You can, because it's a savings.
So
as I said, it's
as
just
soon
a
as I take it
transaction
out, it goes
account.
back up.
Exactly.
And then,
interest is calculated daily, so it depends daily on what that balance is.
Yeah.
Now, I've heard some stories about this where there's been an offset, and this might be just rubbish, but it's something that I've been asked as well, in the respect of that they've got an offset account and they've paid they've got quite a bit of money sitting there, and the lender decides to say, well, we'll permanently reduce that so they can't withdraw it. Is that
On the
something they can do? Yeah, so basically they say that we'll take a $20,000 payment towards your home loan. So, because you had 40,000 sitting there, and you've only now got 20,000 of savings.
I would imagine only if they're in arrears. I don't think a lender can.
So it would have to be in arrears. No, I've heard it before. I've been asked that
It might be
before.
one of those banks where if you don't pay, they come around with a baseball bat spanking the bibia or something.
You don't want to be lending with those banks.
Yeah,
No, that's
I've heard
interesting.
that.
That's the point.
Yeah.
There's all sorts of rumours out there that you hear, and I think because there's quite a bit of non-understanding about some of this, there would be some pretty amazing furphies, I'd say.
Yeah. So, Tracey, your service to consumers is free. For those who don't know, it's a free service.
Yeah.
So how are you paid? How are you paid?
So we're paid from the lender. So we're paid a percentage of the commission from the lender, usually after settlement. So usually within 60 days after settlement. And it really doesn't vary. Like people have this perception that you might, went to this lender because you got more.
Because you're going to get more money.
Yeah, it's all disclosed. So
Yes.
there's really no variance these days in between.
And that would be in the contract, so that they can see it anyway, so they know what you're effectively getting.
Disclosed before the loan's submitted.
And when you think about that, if you've actually been able to substantially create a better service and they've got a better deal, they shouldn't really be terribly worried about that, should
Well,
they?
it doesn't
Because it
cost
actually
them,
helps them.
but there's no cost to the
That's
client.
right.
So it's not in their interest rate. It's not payable by them in any way.
So in a sort of a way, if they weren't paying the broker, they're in fact just making more profit to the lender because they'd be doing their own broker.
Or having to have more staff, because there was
That's
a
right.
talk prior to the election that it would be user pay. So
I did hear that. That was one of the Labor policies, but it didn't come in.
So you know that possibly could have happened.
Tracey, on that though, I imagine you would normally give the client his 3 options. This one's this and it has this facility and this interest rate, this one's this and it has this, and then essentially they can choose, can't they?
The majority of the time, but again, not everyone gets a choice. So
Yeah.
you know, you might.
Yeah, sometimes you may
exactly.
not.
It might be the best.
Well,
There's only one that you're actually going to get.
You know,
Yeah.
for example, if you have just started on probation, just started a new job, and you're on probation, you don't get a variety of lenders to choose from.
No.
You might still get a couple.
Generally, how long do you need to be in your job for? Like, so if I change jobs tomorrow, would I still get a loan, not get a loan?
Depending on the industry. So if you change jobs from real estate and
I went to be a
farmer,
marine biologist.
I was going to say back to a farmer. I think that's better.
Okay, let's say I went, more believable. Let's say I went back to being a farmer.
yeah. Well, being a farmer, you'd be self-employed. So you'd need to be self-employed for 2 years.
Okay.
Yep.
Right. So that can have it.
Yeah. So that can have an impact as well.
Now, there's also a move on employment. There's a heck of a lot more people that are on a casual rate or something like that. Do they treat that like it's self-employed
No.
because you're not sure how much you're going to get, or they look at a period of time and say and place an average?
Again,
over
it's banks and policies. So there's
do
one
move.
lender will look at 3 months casual, but the majority of lenders want 6 to 12 months in the industry.
that. That makes some sense
Yeah.
though. If you're going to be lending the money, you want to make sure they can actually pay it back.
Yeah, exactly.
What effect do a lot of people buy a house and then they get to that stage where they, might be looking at buying another one, an investment, and then whiz bang, someone's pregnant? How does that affect people's lending ability?
Well, if it takes an income out of the application, it
And
probably
introduces someone else.
exactly. Your living expenses go higher, so it has a big effect. Yeah.
Okay. So get a loan before you get pregnant.
Were you planning on something? Or?
I was a bit concerned about which way this questioning was going, really.
No,
But never mind.
What other questions? I could ask
I'm
questions
just
on
thinking.
Mark,
I mean, you just gone bang, 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 and I just thought I've just been waiting to see if you're going to pause.
Well, I think there's a lot of these terms that get thrown around: LVR, stamp duty, all these sorts of things, equity, and a lot of people
Don't
don't
know.
understand
Yeah.
what they mean.
Exactly.
And they don't necessarily need to know, or unless they've learned or been told or listened to this podcast, how would they know?
Yeah.
And it can be quite confusing.
Yeah, and even things to do with. If you're looking at it, I'm sure that if one loan might look like it's cheaper, but if you look at the fact that there's a whole heap of fees involved,
Yeah.
it really should be looked at what the cost of that loan
Yeah.
is going to be over the period of time.
Exactly, and that's what they have what's called a comparison rate.
So you often see that with cars and things on the television. They'll go, it'll be 0%, but the comparison rate's 2.4. So that's realistically, they can call the interest rate what they like,
Yeah.
but what it's really costing is
Yeah.
2.4%.
Yeah.
Yeah, so I think there's a bit of a trap that, the water cooler chat around offices, what's your interest rate, what's mine? Mine's 3.87 and mine's 3.92. Well, you're getting ripped off. But maybe they couldn't even use that lender for a whole range of services.
Exactly.
Which is interesting because that's where you started. It's not all just about rate.
No.
Rate is only one part of the equation.
Because so many times, I'll get a phone call and what's the best rate? Well, okay, this is the best rate, but that may not be the best product for you.
Well, I think we've been around here because commission rates for sales and management rates for the rental department, and once you start talking to them and making them understand, it isn't just about rates.
No.
So I'm sure that across the board,
Yeah.
it's important to get as much information as you can.
Yeah.
Tracey, a lot of people, they hear, interest rates have gone down, and often, the Reserve Bank might move at 0.25 and then the bank's actually 3 weeks down the track to move at 0.2. But people go, great, my home loan's gone down. But for most people, what they're paying doesn't actually change, does it? normally it would stay the same and they'll
Depends
just
on
start
the
paying
lenders.
more
So
off?
some
Okay.
lenders just leave the repayments the same unless you actually call the bank to
Okay.
reduce it, but
Yeah.
then other lenders will reduce your payments.
So I suppose if you can keep paying what you've been paying,
Exactly.
all of a sudden you're going to
Yeah.
start paying a lot
Yeah,
more.
and you'd be amazed at how many years you'll cut from your loan and how much interest you can save.
Yeah, and I'm sure again there'll be a whole heap of calculators you can type in, pay an extra $20
Yeah.
a week, and it'll save you like 6 years or something at
Yeah.
the other end.
So I've heard that also paying at different times. So if you're paying weekly or monthly to fortnightly, that changes. And clearly, a lot of people probably think that if I'm paid fortnightly, I should make my payments fortnightly or
Yeah.
monthly. But that works for the same reason.
It
doesn't
does. So weekly and fortnightly pretty much have the same effect, but you're better off to pay those rather than monthly. Because interest is being calculated daily,
Yeah.
you're reducing the principal on a
Yes.
weekly basis.
And in effect, there's not just 4 weeks in a month, isn't there? And that's
Yeah.
what people think all the
Yeah,
time.
and over 30
30 years, that's
of
right.
12
It would
months.
make a big difference.
Yeah, it's a
Yeah.
big difference. Well, I think I've learnt a fair bit tonight, Mark, but I think we've learnt, or hopefully shown, that there's a whole lot of stuff here to learn, and the best thing is to speak to someone, whether it's Tracey or whoever, early, get that information early, especially first home buyers, know what you're up against, work out a savings plan, work out, if you've got to provide a budget for the bank, start doing it now and see what you can or can't
Well, it
do.
makes sense because there's a limited period of time once you sign a contract that everything has to be done. So if you're ready, then obviously it's going to be a lot easier to actually have it settled in the time that it needs to.
I think one of the final things, maybe before I run out of most of my questions, Mark, or before we go, is pre-approval. Everyone says, I've had pre-approval.
that's a good one.
Most of them actually haven't. So what is pre-approval? What does a pre-approved loan mean, Tracey?
Pre-approval is based on your circumstances at the time that you put the application in. So it doesn't necessarily mean that your circumstance is going to be the same in 90 days when you find a property. So people sometimes have a perception that they're pre-approved.
So pre-approval though is I go, Tracey, over the next 2 months I want to buy, my wife and I want to buy a house. Here's all our information. How much money can we get? $122. That's not going to be much, but anyway, let's say we can get $350,000. I can confidently go shop knowing that I'll get that or not.
You would still put an offer in subject to finance because a pre-approval often comes with conditions. All right, so the conditions, number one will be valuation.
Of the property.
And valuation is different necessarily to
So
contract.
that's something that's outside of everyone's control.
So if we buy, so in that case we go buy a house for $320,000 and the bank does the valuation at $280, all of a sudden that could wipe out our pre-approval.
Exactly, yeah. So it's always subject to valuation. They may do a pre-approval based on the information you provided, but they may need to do an employment check, and that could change as well. So, sometimes your payslip may not reflect your full
So
employment conditions.
pre-approval is a really good guide and worthwhile getting,
Definitely.
but you still need to make sure you make an offer to
Subject to finance as well.
subject to finance. Yeah. And that's the advice that as agents we give. I basically say to people, unless you have the money in a suitcase under your bed,
Yep.
then it needs to be subject to
Yep.
finance just to protect them.
And that's the risk that you have with options.
Yeah, absolutely.
So Tracey, if somebody wants to talk to you, how do they find you?
So they can just put my name into Google, they'll find me. Do you want me to give my phone number?
You
Or
can give your
No,
phone
you
number
can
out,
if you
give
like,
yourself
or
a
otherwise.
plug.
But it was just the way that they would actually come and talk to you. Is it?
They would
I
just
dare
give me a
say.
call, and then I usually do a pre-approval over the phone, basically. So I'll pre-qualify them, and then make a time, and then put an application together, or get someone ready to put in an application.
So it sounds like you make it as easy as possible to help them out too.
Yeah, it's quite daunting. I think a lot of people now, when you send the email of the list of requirements, get a
I
little bit.
could imagine it's getting longer.
Yeah, because if you've got to provide 3 months bank statements on your,
Wow. Yeah.
accounts and everything like that, it can get quite overwhelming.
Yeah. So if you can try and get this stuff done, as we always talk about, be organised before you go out shopping and fall in love with a house, you're a long way down the track.
Yeah.
So you can give out your phone number, Tracey.
Yeah, okay, all right. So it's 0427 418 334.
That's fantastic.
Very good.
Look, I think we've absolutely badgered you with questions, and I think we'd love to, if people have got other questions to
Well, some
send
of
them in.
some of the ones I said were some of the ones that I've
Exactly,
been asked
that
to
we've
bring up.
been asked. But you've been so generous with your time and talking to us. It's been fantastic having you on. And I tell you what, Tim, it makes our job easier.
It does, doesn't it?
Especially if you have 50 questions.
I don't have to listen to you all night.
So you get upset because you've got to listen to me all the time.
Well,
and
he
then-
told me that you were going to control the conversation.
I know, he just took over, didn't he? I just don't understand it, really. But we hope that's been beneficial to everybody, and please keep sending those questions in. And I think you've got to mention our number one fan at the moment.
Oh, Jeff, of course. Isn't
Otherwise,
it?
we're going to be in real trouble.
Underground. I think he's out and about. Might even be looking at some houses. At
That's
the moment.
right.
Not sure if I meant to say that, but anyway.
No, that's right. And hopefully, if you do have any questions, that we have answered them. Bear in mind that sometimes the recording is not going live straight away, so it's not that we've forgotten you. The couple of questions we've had recently, it's just that they will come out on the next podcast.
But if you have any specific to this, send them in and we can get
Absolutely,
them
we'll make sure they're passed on. And if there's other areas that you think that of people that we should talk to on the podcast, by all means, send them in to us, and we'll happily get somebody. And maybe further down the track. Oh yeah, we can.
Yeah, we can shake hands.
And if we hopefully maybe further down the track, we can maybe invite you back and get some extra questions.
Definitely.
Part 2. Well, thank you very
When
much.
the weather's warmer.
Yeah.
Yes.
Thank you, Tracey. Thank you, Mark.
Thank you, Tim.
Pleasure.
And we'll see you all next time. And thank you for listening or watching, whichever device you may be choosing.
Okay. Bye.